For 3 years, the American housing market has been frozen. Sellers were trapped by golden handcuffs, and buyers were priced out by 8% interest rates. But right now, in January 2026, something has officially snapped. We call it the 6% pivot. The rates have dropped, inventory is surging, and the rules of the game just changed. If you've been waiting on the sidelines, this is the most important 5 minutes you'll watch all year. Let's dive in. Why is 6% such a big deal? It's psychological. For the last 2 years, the gap between a 3% pandemic mortgage and a 7.5% new mortgage was a chasm no one wanted to cross. But at 6.06%, that gap is narrowing. Experts are calling this the psychological floor. People who have delayed having kids, moving for jobs, or retiring are finally saying, good enough. We're seeing a 14% jump in sales volume nationwide. The golden handcuffs are finally coming off, and the market is thawing more. Sellers moving means more houses for you to choose from. Inventory is up 20% compared to this time last year. But here is the catch. More supply isn't leading to a price crash. Instead, we're seeing price normalization. We expect home values to grow by a steady 2% to 3% this year. That's actually greatness. It means the market is becoming predictable again. For the first time in years, days on market is increasing. You actually have time to do an inspection and negotiate. The era of waiving everything just to get a house is over. If you bought in 2024 at 7.5%, listen up. The 6% pivot is your exit strategy. Refinance applications are exploding because dropping just 1.5% on your rate can save you nearly $500 a month on an average home. Plus, under the new 2026 OBBB Tax Bill, there's a massive hidden win. You can now deduct up to $10,000 in interest on U.S.-made auto loans, and the SALT deduction cap has been raised to $40,000. That extra cash in your pocket is making the 6% mortgage much easier to swallow. Is it all sunshine? Not quite. 6% is still double what we saw in 2021. And while inventory is up, we are still in a national shortage. If rates dip toward 5.5% later this year, expect a feeding frenzy that could drive prices back up. The window of calm might be shorter than you think. The bottom line, the 6% pivot is the great rebalancing of the American dream. It's not a fire sale, but it's the most rational market we've seen in a decade. What about you? Are you jumping in at 6%? Or are you holding out for 5%? Let me know in the comments. And if you want my custom 2026 home buyers checklist, hit that link in the description. Don't forget to like and subscribe for more finance updates. I'll see you in the next one.